Imagine this, you want to send $100 to a friend overseas. With a regular bank, it could take days, cost you $20 in fees, and sometimes the money doesn't even arrive. Now, with a stable coin, you can do the same thing in seconds, at almost no cost, 24/7. Sounds unreal, right? But that's the world we're moving into in 2025. Stablecoins are growing so fast that people are asking, are they replacing banks? Today, I'll explain this in the simplest way possible, so even if you're brand new to crypto, you'll get it. Stablecoins are a type of cryptocurrency. But unlike Bitcoin or Ethereum, which can go up and down in price like crazy, a stablecoin is designed to stay the same value. One stablecoin is usually tied, or pegged, to something stable, like the US dollar. For example, 1 USDT, also known as Tether, is meant to always equal $1. 1 USDC, or USD coin, is also meant to equal $1. Even PayPal created one called PYUSD, and it's also tied to $1. It's called stable because the value doesn't jump around. If you have $50 in stable coins today, it should still be worth $50 tomorrow. That makes them different from most other cryptos, which are more like investments. Stable coins are meant to act like digital cash. So why are people using stable coins instead of banks? Let's break it down. Banks are slow. Sending money overseas with a bank can take 3 to 5 business days. Stable coins can do it in seconds. Banks charge high fees. You might pay $10, $20, or even $30 just to send money. Stablecoin transfers usually cost a few cents. Banks have business hours. If you need to send money on a Saturday night, good luck. Stablecoins work 24/7, all year. And banks require permission. To open a bank account, you need documents, approvals, sometimes even a minimum balance. With stablecoins, all you need is a smartphone and internet. For many people, especially in countries with weak banks or unstable currencies, stablecoins are life-changing. They can store value, protect against inflation, and send money to family instantly. But how do stablecoins actually work? Let's keep it simple. Imagine a company issues a stable coin, like USDC. For every 1 USDC coin they create, they're supposed to keep 1 actual US dollar in a bank account or safe investment. So if 10 million USDC exist, there should be $10 million in reserves. That way, if you want to trade your USDC for real dollars, the company can give it back to you. It's almost like a digital receipt. Instead of carrying physical dollars, you carry a token that says, this is worth $1. Of course, it's not all perfect. Stablecoins still come with risks. First, trust issues. You're trusting the company that issues the coin. If they don't really hold enough dollars in reserve, the stablecoin could fail. This happened with TerraUSD in 2022. It was supposed to stay at $1, but it collapsed and people lost billions. Second, regulation. Governments are not fully comfortable with stable coins. They worry criminals could use them to hide money or avoid taxes. So the rules around stable coins could change at any time. Third, technology risks. If you lose your crypto wallet or get hacked, your stable coins are gone. There's no customer service to call, no "forgot password" button. So how are banks and governments reacting? They're not just sitting around. Many countries are building their own digital currencies, called CBDCs, Central Bank Digital Currencies. These are basically government-backed stable coins. China already has the digital yuan. The European Union is testing the digital euro. Even the United States is studying a digital dollar. The idea is to give people the speed and convenience of stable coins, but under government control. At the same time, some banks are working with crypto companies, trying to offer stable coin services instead of fighting them. They know ignoring this shift could leave them behind. So, are stable coins really replacing banks in 2025? The answer is, not exactly. Banks aren't disappearing tomorrow. They still control loans, mortgages, credit, and massive parts of the financial system. But when it comes to moving money quickly, cheaply, and globally, stable coins are already winning. They've taken over crypto markets, they're disrupting cross-border payments, and they've proved that money can move without traditional banks. It's not really banks versus stable coins anymore. It's about banks being forced to evolve. The reality is that stable coins may not kill banks, but they've already changed money forever. Now I want to hear from you. Do you think stablecoins will eventually replace banks, or will banks adapt and stay powerful? Drop your thoughts in the comments. If you found this breakdown useful, make sure you like this video, subscribe, and hit the bell so you don't miss future insights on the future of finance.